Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're here now on Monday, the 13th of February, 2023, getting on after 6 p.m. It's Valentine's Day tomorrow. Remember to tell everybody about that, the ones you love. I got mine already. I'm going to be good. I'm going to be in the graces. All right, so what do we do right here? Well, tomorrow's a huge day. Let me explain it before we go any further. And let me get to where I want to be here. Here we are. It's CPI day. What's going to happen tomorrow is we have a new weighting mechanism in CPI. And how that weighting mechanism works is they're going to change what shelter, housing, rent, think about it, what percentage that takes now, which is up to over 25% of the CPI number. They're going to take down automobiles. They're going to redo how they compile the data. Everything's changing in these formulas. Therefore, as much as we're getting these new numbers, I don't know how to weight them with the new formulas. Everybody wants to see it. The formulas were given on Friday, so it's not as though different economists don't have it. I spent a long time today putting together what's coming out of JP Morgan and Morgan Stanley. And they have taken these new numbers, put it together with their game plan, and they've issued it. So I've given you from their trade notes what they are telling people to do when the reports come out, what their expectations are as to what's going to happen. You've got to read what I'm writing if you want to see it. And it's obviously going to go out after I put these out tonight, but it's all written and away you go. Do I take a guess as to what's going to be? The answer is no. I think that doesn't make sense. Rather, what I do is I put it all in the morning videos as we go through together. I'll come to the charts in a minute here, but whether you trade ETFs or futures, starting at 5:30, I'll talk the futures, but I make you a promise that's not going to be where the action is tomorrow. The action is going to be at 7:30, and I'll have that all covered in the ETFs because they're based on futures anyways. And away we go. So my combo package of that data for the videos will cover that. And of course, then I'll be putting out possibly special updates for my written people. How do you get any of this? Go to our website, folks. It's so simple. IraEpstein.com under research. It's all there. It's very, very simple to work with. Okay. So, by the way, you can click up here at any time. You'll see an icon also come, and that'll take you to the website. So let's leave this and go to the charts and see what we have together. And let me bring this on because that's what I know you like. All right. We've been getting a rally. The market is consistent in that it doesn't believe that the Fed will continue to stay with high interest rates through all of 2023. That has not changed. The report tomorrow may validate that thinking or may just throw it out the window. I don't have the slightest idea which. Here's what we do know. We're going to have the new numbers now, and we're going to get them again in March before the next FOMC meeting. So we're going to be able to double dip. But this is so important because traders, there's big bets. Is the market going to go this way, that way? The market's come down too much. The market's not going to have to drop. We're not going into the recession, they think. Then you step back to some of the banks. Morgan Stanley, their head economist that I follow, he wants you out of stocks now, taking advantage of these high rates to lock in rates because he doesn't think the market's properly priced in a recession. Then JP Morgan's given you a whole game plan as to if this number does that, this is what happens, that, and it's all covered tonight. So I'm not going to do that. I'm going to let my traders cover that. But now we go to the chart action. The chart action has undeniably been friendly. Once you got in October-November period here over that 18-day average, you've spent 90% of the time over it. That's a bullish bias to the market. The market's in a current distribution pattern. The spike high, the reaction low, and you've just now spent 2 weeks going sideways here trying to figure out what it's going to do. The pattern is one of lower spike highs off the swing line and lower lows. The definition of a downtrend completely countered, wiped out because the market's over the 18-day average of closes. Now, on Friday, the market hit that average and gave you the good bounce. If it gets under 460.50, problems. That could then set the market to the point where it wants to come back into right here where I've got my fingers, that area. Where's the resistance? Initially at the upper Bollinger Band. That's 4207. That would clear the most recent highs that we've had, and it would have to get through the last rally high here. It would not say the market's uptrend in the traditional sense of higher highs and higher lows. You would have a lower low, higher high. It's easier to get bearish if the market gets under 460.50, as you'd have lower highs, lower lows under a key average, and a target number of very close together, the 200-day average at 39, let's call it 39.80 to 39.87.75 in the Bollinger Band. That would be the easier target. When we come to the micro S&P here with the momentum, down. So we come over to the mini NASDAQ, same pattern. Lower highs, lower lows, and staying over the 18-day average. The difference in the pattern, there's a big difference. If you take out 12,243, you run right into support at the 200-day average, about 150 points lower. So just keep that in the back of your mind that the S&P can fall easier and harder to get to major support than the NASDAQ if it drops. And here too, you lost the embedded reading and you've made your run to the 18-day average. So you're down to the zones. The Dow is in the middle of no man's land. It is overbought. It's going sideways in this tube of the Bollinger Band. I told you, and I'll say it again, when I see that, you generally lose a lot of money. You're buying because you're looking for follow-through, and it doesn't follow through. You're selling looking for follow-through, and it doesn't follow through. That's because it's building power for whatever the next move is going to be. In the micro-mini Russell, you had lost the embedded reading. You went down just recently to the 18-day average. You neutralized everything, and you're no longer overbought. Can you get an out-and-out buy signal? Well, unless you had a big outside day up, the answer is no, because you'll have a lower high, and even if this high now gets over that, you'd have a lower low, higher high. So at least my game plans are set in my head as to where I'm at. Today was a cover-all shorts day in bonds. What the heck's he talking about? First combination hit of the 100-day average in green and the Bollinger Band. So long. You're not embedded. You might embed, but you're not there yet. 10-year note did it last week. And it's pulled right back to that average. The easy money's out of the market. Could we embed? Yes. If we do, what happens? Be careful. If you start embedding from here, you might be going to those lows, which would be new highs on interest rates if there were a big surprise. If there isn't a surprise, this breakdown that you've had creates the opportunity for a rally. It's a wild one for tomorrow. In the dollar index, you have no trend. You have a higher high, a lower low. You are stuck between the bands and you are overbought. You have the flip-flop in the eurocurrency with a lower low and a higher high stuck. They're exact mirror images just flipped around. In the British pound, the market is still working off an oversold condition. You still have one of the numbers under 30. In my full charting course, I teach where these numbers come in and what you do. I believe that the program type of trade says, hey, if we're oversold, why are we deploying money in it? If we're overbought, why are we deploying money? If it's embedded, excuse me, you're beyond that. Deploy a lot of money into that trend until that part of the reading is lost. I believe it's really pretty along those lines and simple. You're not there to do anything. Bitcoin, this is a cover-all short area. So we've done well recently talking about Bitcoin coming out of this, making its run, its breakout run, and now the market coming back down. What's going on? The government's after all these coin exchanges. It isn't over. It's just beginning. I've been a broker since '69. You think I didn't see what they did to the commodity people and the penny stock people? It's not just commodities, folks. You ever heard the word penny stocks? How they put all those people and regulated them out of the business? Well, in the cryptos, they're going to make sure that they cannot hurt the U.S. banking system. Once the regulators are out of the box, they don't go back in. Who's going to put them back in? It's not as though there's a Federal Reserve to do it. Got it? So those exchanges and those traders can go offshore. Just better not do business in America against the American rules that they're going to set up. This whole game's changing for the better. There is nothing wrong with the concept. If you want to own that asset class, do it. There's got to be more transparency. In WTI and crude, sideways action. So the differential sort of stuck. I always like to look at the differential. Sort of stuck. Sometimes it'll tell you a story. When it picks up like this, you know that you want to own Brent. You don't want to own WTI. Well, it's still saying Brent's the stronger of the two, but you're sort of caught in this sideways band of a lower low, higher high. It's trying to pick up, but it hasn't. What's it weighted on? China. Where's China? Sleeping. They're not doing anything. They don't even tell us how bad their COVID cases are. Tell me the stories you've got. I've been looking for them. Don't get me wrong. There's got to be some out there. I can't find them. Give me an accurate government count, truthful. How bad did the COVID hit the different sections of China? Nobody seems to know. But what we do know, they're not out there buying copper in the open market, and I don't see that they're buying more crude at this point in time. So that tells me that they've got to get through whatever the disease was, and we've seen it here in America. It has an ebb and then it tides, right? So you're going to see that thing fall away, and when it does, that's when the Chinese will come into the market, and that's when we'll get the impact of the end of COVID there. When? Could be spring. Isn't it how it worked with us? Why would it work any different there? WTI over the 18-day average, but no setup. Again, bounced off the bands, and that's about all that it did. I like what gasoline has done. I told you I thought it was too cheap down here. It hasn't thrown out that buy yet. I didn't think it would just yet. I've got a setup there. If you looked at the energy report I did, the video report, this is all fitting right in with what I had put together for you. And last, nat gas. A lot of news over the weekend on nat gas. I wish I could say it was good. I don't know what it is. Freeport is still, but they had a meeting Saturday. And on that meeting, it appears that the people that run the plant were not there. The government was there, the regulators, with the public, and they made it sound like it'll be April or so before all the parts are in and everything's going to go. Yet on Friday, we read reports where a minimal amount of LNG is being loaded onto tankers, nothing big, as they're working their way into production. So pretty clear it's going to be springtime before we see a lot coming out of that. The other thing that came out on the report is how many errors the operators of the plant did and how many safety errors there were. That won't be allowed. The regulators are going to step in. You know, again, once you do it wrong, you got these people all over you, and they don't go away, rightly so. So I can't wait for the morning. We're going to have some real fun with it. Again, you might want to join tonight so you can get in with me, and I want you there as one of my members. Just click up here. It'll take you right to the research area. Sign up, and away you go. I'm Ira Epstein. I'll see you in the morning.